Before we get started, I just want to take a second to thank Jeanette, Hubert, the entire TradeThirsty team for putting together this event. And it really means a lot to have an opportunity to get out there and speak and hear from other speakers. I really enjoyed listening to Johnny. I don't do a whole lot with stocks, but loved hearing from him. I really liked the passion in his voice on when he got into the last couple of slides and was doing that live analysis. Man, you could really hear he loves what he does and has some passion there. I hope you guys all took advantage of that offer that he's got there. It's a great deal. At the same time, I also want to thank you, all of you that are attending today, taking time out of your day to be here. I mean, it's a Saturday. It's one of our only free days for a lot of us. So, taking time to invest in yourself and spending time with us, that really means a lot. I know it's going to help you in the long run to become better traders. For those of you that are interested in Forex, I've got something I'm going to share with you today that is my trading edge. I learned it from James, who you see here on the screen. He's my trading partner, my mentor. While you're listening today, I want you to keep in mind the word simplicity. That means a lot. What I'm going to show you today is something it's really dead simple. It's crazy simple, but it has a huge impact on how you trade Forex. And it's one of those things that when you hear it, you're going to go, man, why didn't I think of that sooner? Thing is, we often confuse complexity with advancement and technology, and in reality, the simple things are the ones that work. Simple things are the things that we can duplicate. We can implement them swiftly and easily. So keep that in your mind. Keep simplicity out there. So, title of the segment that we're talking about today is double your Forex profits with half the effort. I know that sounds like a huge claim, but again, when you see what we're talking about, I think it'll have some aha moments here. I specialize as a Forex trader. That's what I do. We trade currencies, and I'm particularly fond of trading in the direction of the trend. So what we're going to teach you today is how we identify that, and then we exploit our edge in the marketplace. I feel like Forex is one of the easiest markets to trade. There's just less information to have to look at for me, and also because of the edge I'm going to show you, I feel like it makes it something that's able to have this consistency that we're all looking for. So hopefully that's of interest to you. For those of you that are trading Forex, kind of interesting statistic is that most of you that are here, about 98% make a mistake every time you enter a trade in the Forex market. And you're probably missing out on profits or even failing as a result of this major mistake. So out of every 1,000 Forex traders, there's about 980 plus that are making this huge mistake. So let's go ahead and get into this. I'm going to ask you a quick question. And I know a lot of you have probably heard me talk before, and you may have seen this, so don't give it away for everybody else. But if I put you down in front of your trading platform and I show you a chart like this, what do you want to know? What's the information that you want to get out of that? And use the chat. Type in. I should have access to be able to see the chat here. If I don't, we'll figure it out. But let me know. What do you want to know when you look at this? And I say use the chat because I want to make sure that you're interacting. I'm going to ask questions sometimes that seem rhetorical, and they kind of are. But if you interact, you're going to get more out of it. So the more you interact, the more that you're engaged and you're listening to what I'm saying, the other speakers are saying, and the more you're going to take away from this and have something that you can actually apply on Monday morning to start off your trading. So anyway, most of you are saying you want to know which direction this is going to go. That's what we're trying to figure out when we look at one of our charts, right? We're trying to figure out which direction price is going to go next. We want to have a high degree of certainty to do that. So if we look at a pair chart like this one, no, not like this one, but, picking on the Euro USD, if we put up a pair chart and look at that, we probably, again, would want to be able to identify if the market's going to be moving or if it's going to be in this choppy sideways range, because we want to stay out of those. So if that's something good that you'd like to be able to know if it's going to be chopping and sideways and stay away from it, put a yes in. Let me know if that's something you want to be able to know about, right? Okay. Just check here. A few more yeses coming in, so that's good. One last question, kind of an obvious one. I know I'm kind of pandering to you guys, but this all comes together for a reason later on. If you could know in advance when a market was going to be trending, would that be something that you would want to know? That way you could get in as early as possible and ride for maximum profits, right? So that'd be a good skill. So if you can identify those things, those are good skills you could have that would really allow you to become a better trader. And if you can't do that at the moment, it means you're missing out on this spectacularly simple trick that'll help you identify those things. So the good news is, end of the training, I'm going to have shown you exactly how to identify at a glance which direction price is going to likely go next. So that way you can increase your win rate and start winning more often than you're losing, right? We're going to teach you how to spot the trends as they're starting. That way you can get in early. You're never going to get in at the very top and the very bottom, but you can identify when these trends are starting so that you can get in on these trades and take advantage of that. We're also going to teach you how to avoid choppy, range-bound market conditions, which that can be killers. Those choppy markets, I know there's great ways to trade them, but they can also be killers, and we want to avoid them. Why take the risk? At least that's how I look at it, right? This is important to you. It's important to you to know because the forex market has grown tremendously and continues to grow, right? Over the past 3 years, it's grown by 1/3. It's increasing. The pie is getting bigger and bigger and bigger, and it's really never been easier to take your slice. The challenge is we don't often know how to trade it. You know, this market is fantastic. Forex market's got tremendous liquidity. It's got a very low barrier of entry. It's got fantastic volatility, consistent trends, and many, 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 many opportunities out there. I mean, it's literally never been easier to profit in Forex if you know what you're doing. The challenge is, as we mentioned before, the failure rate among amateur traders is still really, really high. So the market's getting easier to trade. The number of profitable traders, though, isn't increasing proportionally. So people are still struggling, and I feel like that's often because the strategies that we teach or are often taught to trade Forex are missing out on a vital ingredient, a very, very key component that helps you look at the right things to trade the markets. And Forex is very different from other markets, and we're going to explain that here in just a second. We're going to help you know that so that you can become one of the educated traders that is taking advantage of these opportunities and not getting caught on the other side where you're paying for someone else's lifestyle, right? So who am I? I'm Brian Stickney. We mentioned that earlier. Started trading in 2008. I trade primarily in the Forex. I trade other things as well. I do other things as well. But Forex is mainly my game. I met James in 2012. Started out as a student. I came on as a student. I saw what he was doing, heard what he was teaching, and became a believer. Now I run some live training classes for him. I do student mentoring, one-on-one coaching. And trading really ultimately allows me to live and trade on my own terms. But as Jeanette had mentioned, lived in Costa Rica for a few years, lived in Argentina for a while. My family and I are always on the move. Trading allows me to travel, and that's our passion. It's a pretty amazing thing. James, my mentor, he is a 15-year trading veteran of Forex, and the method that he taught to me is what I'm going to impart to you today. The cool thing about this is it's not something he just happened across on his own. He actually learned this right from the source. He had learned his information from banks and bankers. So I'm going to give you a quick backstory about James. That way you can know a little bit more about who we are, where we're coming from, where the method comes from, and that'll help you fill in some pieces as we go on. So James got his start out of high school as a Royal Marine Commando. And he spent 10 years in the armed forces as a elite specialist unit. That's him with the shaved head. He did a lot of alpine stuff and ultimately developed some skills that very wealthy people like to pay for because they want people like James protecting him, right? So when he left the Marines, he became a bodyguard. And as a bodyguard, he got to work with some of the wealthiest and most powerful people on the planet. He looked after billionaires on the Forbes rich list. He looked after members of royalty. He's English, by the way. And, of course, the odd celebrity. That's him heroically protecting Elton John from an oncoming little girl. These are pictures he can show you, by the way, because they're out there in the public domain. They were snapped by paparazzi. What he can't show you are the bigger clients, the people that are of the highest echelons out there in a pretty secretive world. And these are the people that he learned from. He signed confidentiality clauses, obviously, would put him in a lot of trouble if he started dropping names of who his bodyguarding clients were back in the day. But ultimately, it was the association with these super wealthy, very powerful, very secretive people that led to his, I don't want to say discovery, but his education in Forex, and that's what we're going to reveal to you today. Basically involves a billionaire hedge fund manager, reclusive millionaire, and the head exchange trader at an international bank in London. I always joke, it sounds like the beginning of a joke, three millionaires walk into a bar. But reality is, the term insider secrets does not do the story justice. If you ever have a chance to sit down and have a cup of coffee or drink with James, he'll share the story with you, and it's pretty amazing how it came about. I'm not going to get into a ton of detail about it, but it's pretty cool. But you'll see how everything fits together here in a moment. So right now, I'm going to assume that you're here attending this training because you want to learn more about how to improve your skills as a forex trader, but that's what we're going to impart to you today, some great information that'll help you become a better foreign exchange trader. Problem right now that most of us are facing is that trading looks super simple on the outset, but there's something missing. There's this key ingredient. There's something that maybe we're close, we just haven't quite grasped it yet, something we haven't seen or understood. There's usually there's one key element that we need to discover in order to give a breakthrough for us, right? If you've ever felt that way, if you've ever just kind of looked at the markets going, God, what do they know that I don't know? That elusive they, right? What do they know that I don't know? What are they doing that I'm not doing? Type in chat. Let me know if you've experienced that frustration. I know I had. When I first started trading, I got knocked for a loop. I feel like this is an actual picture of me. I feel like that fist came out of the monitor and actually hit me, because that's how it felt when I started trading. I'm like, this is easy. I'm going to open a trading account. I'm going to go to work and I'm going to change my life. And, reality set in. I know we've all been there. I would dare to venture to say everybody in this room has been there. James was as well. The good thing is, he didn't have to ask himself that question over and over and over. He had access to some very well-connected people. One happened to be a very well-connected multimillionaire that had gotten to know James. When you bodyguard for somebody, you spend multiple weeks and months at a time traveling with these people, and you form relationships. And James had gotten to know this guy pretty well, and he had gotten to know James and knew that James was trying to learn how to trade. So one day, as James was sitting in the back, on his laptop, he walked over to him and said, "Hey, man, listen, I want to help you out. I know you're not going to be a bodyguard forever. Let me give you a leg up." And he introduced James to the head exchange trader at an international bank in London and said, "Listen, these guys owe me some favors. Ask them for advice. See what they can do for you." So James was able to, kind of right place, right time. He got to have access to someone that sat down, brought him into the office, let them sit there with their team and learn the ins and outs of how the banks trade. Then, fast forward, a few months down the road, and he hooks up with James again. They talk a little bit, and he goes, "Okay, great. Well, let me introduce you now to a hedge fund manager and talk to this guy. Get some advice from him." So James was able to get some advice directly from the horse's mouth about the real truth in Forex that completely smashed these myths and misconceptions that we often believe as amateur traders. And once you understand that, you go, wow, this light bulb comes on, and you realize that there's this missing link. And the missing link I'd like to get to right now. So when you sit down and you start to trade Forex, you look at something, right? You look at a chart. This is a pound USD. And this goes back a ways, but you look at a chart. The date on this really doesn't matter. When you look at a pair chart that you want to trade, you're going to maybe add some things to it. Maybe you've got trend lines, some moving averages, MACD, support resistance, any indicator you want. You've got a chart. You've got some indicators on it. And you're ultimately trying to figure out where price is going to go next, just like we said up front. When you sit down to trade, you want to know something. You want to know where price is likely going to go next. Okay? Now, if I showed you this and I asked you, where's it going next? What would you tell me? And it's not a rhetorical question. Put it in. Let me know. Where do you think price is going next based on the information that you see here? And again, it's not a rhetorical question. Interact. Let me know. Let me know what you think is going to happen here. And you're probably not answering because you're like, dude, you're setting me up. Well, I kind of am. Because here's the thing. Despite what a lot of people think, it's impossible to know where price is going to go next, because this individual pair chart by itself really has almost worthless information. It doesn't reveal much at all about the marketplace. and I'm kind of slowing down and pausing because I want that to sink in. This currency pair chart doesn't reveal what you really needed to know to make a good decision about where price is going to go next. And here's why. People often trade forex the same way they trade stocks and commodities, right? Which kind of makes sense. The charts look very similar. In fact, they look the same. I mean, they all contain price bars, which are made up of high, low, open, and close. And when you look at it at face value, the Euro USD chart looks just like this oil chart. If I didn't have headings above the two, you wouldn't know which was which. The challenge is, if you're trading the Euro USD chart or any other currency pair chart on its own, that's that first fundamental mistake that you're making. And here's why. Forex is not like any other market that's out there. The charts are not like other charts. And I have to watch myself and slow down because I get passionate about what I talk about, and I start talking real fast, so I have to make sure I slow down to accentuate certain points. But when you look at a pair chart in Forex, it's not like other charts that are out there. I mean, if you were trading a stock or something like gold or oil, all the information that you need about that instrument is on the chart, right? You've got everything about that you need. It's in front of you. You can apply whatever indicators you want to it, and you can make some legitimate, good trading decisions. However, if you want to trade the Euro USD, just picking on the Euro USD, it's the most widely traded pair out there. But if you want to trade the Euro USD, this chart doesn't have what you need. And here's why. Is the Euro USD a thing? And I'm asking that question legitimately. Is the USD a thing? No, it's not. Gold is a thing. Oil is a thing. The Euro USD is just an exchange rate between the euro and the USD. So the Euro USD is not a thing. It's an exchange rate. The chart that we're seeing is simply telling us the rate if we're going to trade one for the other. So it would almost be like having this fictional, gold over oil chart. Call it the GOIL. I don't know. But gold is a market and oil is a market. So if we created this fictional chart of gold over oil, all it's showing us would be the exchange rate if we wanted to swap one for the other. And that's what Forex charts show us. They show us an exchange rate if we're going to swap one for the other. So if you were trying to predict price direction on this fictional gold over oil chart, what would you want to know? Would you look at this chart in isolation? Or would you maybe step back and go, well, wait a minute, I probably need to know what's happening in gold first, and then I need to know what's happening in oil, and then I could figure out, which one's going up, which one's going down. And if the gold market was going up because the price of gold's increasing, it's being heavily bought, and the oil market was going down because the price of oil is falling, it's being heavily sold off, then we'd be able to legitimately make a logical assumption of which direction price is most likely to continue going or go next, right? So when we're going to trade the Euro USD, if we're trading, this is applying to currencies, by the way. If we're trading the Euro USD, what we'd want to look at is the Euro first, and then the USD second. And that way we could see which one's going up, which one's going down, and then we'd get a better idea of which way that exchange rate is most likely to go next, right? Does that make sense? I hope that's making sense. I mean, we're going to build on this and keep building on it. But hopefully that makes some sense to you. The Forex market is not made up of individual charts. And that was a huge thing for me because, if first starting to trade, and probably many of you do the same thing, you start looking and you start trading your quote, favorite charts. The thing is, Forex is not the charts are just pairings of currencies, right? It's made up of individual currencies, and then those individual currencies paired together create 28 potential different pairs. So the 8 major, there's way more than just 8 currencies, but the 8 major currencies that we look at are the Euro, the USD, Pound, Yen, CAD, Swissy, Aussie, and New Zealand. You pair those 8 together, you get 28 different currency pairings of different ways you can exchange one for the other, right? So if you just look at a pair chart in isolation, you're just looking at 1/28th of the marketplace. It's only 3.5%. So understanding that, we can come back and go, okay, well maybe that's why Brian said that this chart has almost no valuable information on it. it's missing 96.5% of what you need that's influencing the exchange rate. Remember, we've got two economies that we're exchanging, currencies, and there's a lot of things impacting and affecting each of those economies that's driving rates one way or the other. So if you want to trade the Euro USD, you probably need to know what's actually happening out there in that wider marketplace, what's actually happening in the real market, because we're swapping two currencies for one another. Which one's strong? Which one's weak? Which one's rising? Which one's falling? So hopefully, just to get things going, that's a big aha moment for you. I mean, it was for me. When I first started trading and James started talking to me about this is when I went, oh crap, I'm missing a lot of information. This might be why I've been struggling so much. But I'm lacking consistency because I'm not looking at all the information that I need out there. I'm just looking at this little bitty piece of a jigsaw puzzle and trying to extrapolate what the overall picture is. And it's no wonder, because that's what many of us do when we're trading foreign exchange. We get focused on this chart, not realizing that chart's just an exchange rate, and we need to look at the broader market of what's actually happening out there. So that should be your first aha moment. Which leads me to the next thing, and I'm going to get a little bit off topic real quick, but a lot of people, because they keep failing over and over and over, start thinking the game's rigged. So something's rigged against them. The big boys are out to get them. The market makers are out to get them. They're manipulating price. The brokers hunting my stop. Whatever it might be. It's the quote they. It's the, I think, assignment of blame. Oftentimes we don't know what we don't know, and because of that, we get caught up in this loop. We get discouraged, and we start assigning blame as to something must be happening because we think we're not controlling our own destiny. Challenge is, if you really believe that, you probably should just hang it up, because you're looking at trillions of dollars versus your 30, 40, 50, $100,000 trading account. You're not. If you truly believe that it's stacked against you, you probably should just go. Reality is, it's not stacked against you, and I've just revealed one of the reasons that many forex traders actually fail, because they're not looking at that broader market. And with that understanding, knowing that there's actually something out there and it's not a rigged game, and there's more going on that you just simply didn't understand, you can stop pushing blame off into somebody else and go, hey, maybe I can actually do this. I know when I got started, I felt that huge wave of relief, because I realized, hey, I could finally make money as a foreign exchange trader. So getting into this, just getting started, would you agree that the explanation, the example I gave earlier about individual currencies makes sense and changes your perspective a bit about how the markets work? I hope that gives you kind of a logical base to work from, right? But again, the theory on its own really isn't of any practical use. We need to build on that, and I want to show you how you can apply what we've just talked about into the actual market to make trading decisions. So again, let's come back to this chart. We've been picking on the Euro USD, so let's keep on going with that. So we've already determined that if you need to know what's happening with the Euro USD chart, we need to know what's going on with the Euro first. Then we need to know what's happening with the USD as two separate instruments, because again, that's what professional traders do. They're looking at individual currencies. George Soros wasn't a pair chart trader. He was a currency trader. He trades currencies, not a specific pair chart. So we need to keep that in mind. We need to look at what these individual currencies are doing. And that's what professionals do. They split the market down. If they're looking at the 8 majors, they split the market down something like this, and they assess what's going on with each currency. Now, don't worry, I'm not going to expect each of you to figure out a way to find what's going on with each of the 8 major currencies. I'll show you how to do this in a second. In fact, we'll even give you a free tool that'll do it for you. But just bear with me right now, because I want to explain the process. So when you look at individual currencies like this, you should start to see the staggering opportunity. It should be pretty obvious, because right now when we look at this, we can see at a glance which currencies are strong and trending up and which ones are weak and trending down. Now, that makes a lot more sense to look at the market this way, because even if we made the cardinal mistake of only trading one specific currency pair, right? Even if we made that mistake of only trading on the Euro USD or whatever chart it might be, imagine if you could actually see when currencies were trending and when they were range bound, how much easier it might be to trade. right? If we look at this and we can see strong currencies and weak currencies, we can start to make better trading decisions. If we look at the breadth of the market, right, we could see, okay, wait, I've got a strong currency that's trending up, and I've got a weak currency that's trending down. I can pair those together. Then I get that absolute best market trend, right? I've bought strength and I've sold weakness. I haven't just taken a shot hoping that, the Euro USD is going to do something today. I found two currencies that are actually trending in opposite directions, buying strength, selling weakness. That gives me the opportunity to actually be in a currency that has the potential to move for me, which is where we want to be. We want to be able to find something that's got a trend so that we can take advantage of that move. Imagine if we've got a currency that's flat and another currency that's flat. What do you think's happening over there? Is that something we'd want to trade right now? Yeah, probably not. There's not much going on. They're both just flat. They're both just range bound. So knowing that, we can stay away and we can avoid that range bound choppy market. Now, hopefully knowing that and hopefully being able to see that is giving you some level of relief and maybe showing you why some traders find it so easy to make money while others find it so hard, right? If we're just looking at that one currency pair, we're locked away in this dark corner using 3.5% of the available information. No wonder it's difficult. On the other hand, currency traders or professionals are using 100% of the information that's available in the market, so it makes it easier for them. Doesn't mean they're more intelligent than you. They're just looking at the right things. They've been taught to look at the best of the market instead of just looking at one individual currency pair chart. They're using 28 times more information. So, of course, it gives them a bit of an unfair advantage over other traders. So by now, you should be starting to see the truth about forex trading, and it should clear up why up until now you might have been thinking that trading was impossible or rigged against you because certain things they're either not happening or they're not happening in the way that you think they are, but it's because you've been looking at the wrong information. You haven't been looking at how each of the individual markets, what's going on in each of the individual markets, and pairing that together to give yourself that best trading opportunity. So let's come back over to this. If you're going to look at individual currencies, you need a tool that's going to split the market down for you. And just so happens we have a really good one. We have one on our website. It's free. I'll put a link in later on to show you how to get to that. But we happen to give you a tool that does it for you. But again, what it does is it takes each individual currency strength, or each individual currency, rather, shows you the strength, and then it lays them over on top of one another. So that this way we can see very quickly, very easily, we can do some analysis to understand which currencies are strong, which currencies are weak, which ones are flat. And that lets us make some trading decisions. The beauty of it is you can apply that to any trading system that's out there. Whichever system you currently trade, whatever time frame you currently trade, you can apply currency strength analysis to it, and that's going to improve your outcome tenfold. Because now you use that as a kind of a final filter, right? You've got maybe a trade's being triggered, and you just go and you go, well, I want to know how things are actually moving. What's really causing this market to move? I'm trading on, I don't know, the pound yen. But why is the pound yen really moving? What's really going on? Is it truly sustainable? And looking at currency strength gives you an idea of what's actually going on there. Trading strength against weakness has always been that reliable, most fundamental principle since the markets began, right? Buy strength, sell weakness. Doesn't get any simpler than that. It's always worked. It'll always continue to work. That's how the markets are made up. And if you can understand that, if you can see which ones are actually starting to trend and range, then you can avoid those sideways markets and just stay away from the currencies that aren't moving, right? That's going to give you some real power in your analysis of the marketplace. So let's keep on building on this. We've talked about what the market actually is. We've talked about what we're actually seeing on our charts. We've talked about a few other good core principles, but let's talk about how to actually apply it, right? So I'm going to teach you a simple system using currency strength that you can start using as of Monday morning. And what it is, no doubt, you've heard of a breakout strategy. In fact, Johnny was just talking about breakouts on the S&P using trend lines. So breakout strategies are great. They're a great way to filter our trades and find opportunities that are moving, right? So you can go on any forum, look up London breakout, New York breakout if you don't know what a breakout strategy is. But ultimately, it's really simple to implement. And what you would do is when a new financial center opens, like New York, London, Tokyo, and then you would bracket an order in at the very opening tick of that new financial center opening, bracket an order in. And then what happens is you would, when price breaks out, maybe below, to the downside, your order would be entered. Or if price rises and it breaks out of the high range, then you'd buy. That's all a breakout session is. It's been proven to work very, very well. And the idea of this, applying at the very beginning of a financial center, is to take advantage of that early morning market momentum. Very effective strategy. The challenge is you've got 28 potential pairs made up of the 8 majors. How do you know which one's moving? Do you just blindly trade this on one instrument over and over and over, hoping that something's going to move and it's actually going to create a trend? Or you could maybe look at what's actually happening with each individual currency and then match a strong currency against a weak currency in order to find out which pair has that best opportunity to move, right? So if we take a strong currency that's strong and trending stronger, we look at the market, as it's opening and we find a currency that's weak and trending weaker, then we place the breakout box based on that. And now we've got an opportunity to find a trade that's actually moving. So imagine how much simpler that would be. I mean, step one, look at the currency strength tool before the market begins. See where your trends are occurring. See which currencies are strong and weak. Step two, find that currency pair chart. Step three, place a bracket order and then enter a trade in the direction that the currency strength and weakness tells us on that indicator, and then let the trade go. Now at least we've got the opportunity to be trading in a market that could be moving, as opposed to just blindly doing this on one instrument over and over and over. So imagine at the end of the day how much more relaxed you're going to feel. You're going to feel pretty good about that because you've actually got a reliable method that's giving you an edge that you can apply consistently, simply, the same way every single time. Doing that, do you think you'd maybe have a better win rate? Could bigger moves be more profitable over the long term? I hope you're seeing how simple and easily applied the technique is. It's just common sense. It's super easy way to trade, and that's what we want to do. We want to make our lives easier as a trader. We want to make our trading more reliable as a trader, more enjoyable. By applying currency strength analysis, your win rate is going to go up almost instantly, because at that point you're laser targeting the strong currencies against the weak currencies. You're stacking those odds in your favor. And that's huge. You want to be able to have that professional edge in the marketplace that's based on something that's quantifiable, not just a picture on a chart. And again, a picture on a chart, especially when it comes to forex, is almost worthless. And again, why is that? Because we need to know what's happening with each of the individual currencies. If we don't know what's happening with each of the individual currencies, that picture on the pair chart doesn't tell us anything. Now, of course, you're still going to take losses. I don't want to mislead you and tell you this is the holy grail, and you'll never take a loss again when you start applying currency strength. I mean, of course, no trading technique in the history of history could do that for you. That's impossible. The market conditions can change at any moment for any reason. So I'm not trying to tell you that this is going to give you 100% wins. What it does is it stacks the odds in your favor, and that's all we do as traders. We're always looking at odds and probabilities. We're looking at things over the long term. We're looking to develop an edge that we can apply consistently every single time to give us that positive expectancy. That's all we can do. We're still going to have strings of wins. We're still going to have strings of losses. So I don't want to tell you that when you start Monday morning, you're just going to have winning trades from here to eternity. That's not the case. What currency strength does is it lets us see which currencies are moving and which one has the best probability of giving us a bit of a trend that we can take advantage of. So I just want to make sure you do that. Pick any system that you like. Apply currency strength. Doesn't matter what entry rules you have, what indicators you're using, what time frame you're trading. Just use your favorite system and then add currency strength analysis as that final confirmation, and then you'll start to see your results begin to get better and better and better because you're actually using something that gives you an edge in the marketplace to find that potential move. So I know that sounds simple, but that simple step is going to give you huge results. So hopefully what I've talked about so far, you're liking. Let me go back over here to chat, and I'm sure there's some questions coming in. I can't really watch chat and talk at the same time. It's like chewing gum. But I can chew gum and walk. I just can't watch chat and talk. But anyway, I hope you liked what we've talked about. I hope it's given you some aha moments because when I first heard this from James, it did that for me. Now, I've got something I'd like to talk to you about. If you like what you've heard here, I do have a special offer for those of you that are on the call today. I'm not going to give you some horrible long sales pitch or anything. I'm just going to show you what we do. And if you'd like to learn more based on what you've seen, because we've really just hit a 30,000 foot overview. There's more to it, obviously. And if you'd like to learn more about it, if you are a currency trader and you want to keep stacking the deck in your favor and learning more about how the markets work, then this is a great spot for you to start over here. I got to get my slide back. I clicked to go to chat, and now I lost my, there we go, my pointer clickability. So we've got a really detailed course for you that's 10 unique lessons. It's about 5 hours of training, and it really breaks down the complete process that we've just talked about and gives you a full system, including a number of additional tools that help you get the maximum benefit out of what we've just been talking about here. So if you want more detailed training, this is the way to go. Now I am showing you CDs and binders and stuff. It's an electronic resource that we provide to you. So I don't want you to think you're going to get a physical kit. This kind of helps people visualize what's coming through. But each lesson's about 25 minutes. It's broken down into these segments. We found that if we go any longer than 20 or 30 minutes, people just kind of tune out. It's too much information. So we break down the lessons into about 25-minute segments and just give you what you need. It cuts right to the chase and gives you that jam-packed information that's the crucial points that help you become a better trader. Lesson 1, we get into the truth about the forex market. This is big because it goes into a lot more depth than what I've been able to talk to you about here today. And it helps you understand what the major players are doing and more about how the market is actually working behind the scenes. We touched the iceberg, about how we should be looking at each individual currency, but there's a bit more to it than that. And we need to be able to see the full potential and the staggering opportunity that's in forex. And if we learn the truth about the market, it helps us kind of peel back the onion on that, right? Lesson 2, we get into how prices actually move in forex. Again, I've already mentioned forex is different from other markets. In forex, it's an auction market. So the prices that we see quoted on your screen on those currency pair charts isn't priced where an exchange was last made. That's where people are willing to buy or sell, and prices can move without any actual exchanging taking place. That's why we see spreads widen so much around news and so on. We can get into that. Lesson 2 goes into depth on how prices move, and there's a mathematical fact, yeah, that's what it is, that proves price is more likely to move in one direction once it starts moving, and we get into about why that is, and we give you some math and illustrations behind why once price starts moving, why it's more likely to continue moving in a certain direction. It's an indisputable mathematical piece of how the markets work, but we'll get into that in lesson 2. Lesson 3, we focus on trade exits. We start teaching you about how money is actually made, because you actually make money or lose money on the exit, not when you enter. Up until the exit, it's all unrealized loss or unrealized profit. You actually are making that profit or loss when you actually exit that single trade. Lesson 4, we get into risk management, money management. This is a big piece. It's a very underutilized resource that professional money managers use so that they can avoid those dream-crushing losses. I'm sure people have been there where you over risk or you over leverage and you get into these situations where dream crushing is probably the right word to use, where it can really have dramatic effects on your trading account. So we teach you about some really solid risk and trade management techniques to use out there. In lesson 5, we get into a complete tutorial on how currency strength analysis works and what the tool is. Again, we want to make sure everyone understands everything that we're doing. If you're going to be using a tool to trade, you need to know what it's based on, how it makes its calculations, what it's looking at, how it actually works. Because if you're going to use something to make a trading decision, you need to not ever question its accuracy and its reliability. So we go into depth on how the currency strength tool works and what it is. So that way you can know beyond a doubt that it does what it says it's going to do. In lesson 6, we get into some basic trading rules. We covered, very high level trading rules here earlier. How the forex markets work, what to look at, a process to find a trade entry, and then place a breakout trade. But we get into some more specifics over that so you can really get the right market analysis and then find that right trade entry. Lesson 7, we go through trade after trade after trade after trade after pattern after pattern after pattern after pattern, and we get things ingrained into your mind so that you can recognize instantly and make decisions without hesitation. So we get into some pattern recognition in lesson 7. Then in lesson 8, James comes back and does more on money management, stop losses, stop orders, how to enter those, how to use them so that you know exactly how much money to risk and precisely where to place your pending stop orders so that you're managing your money and, again, limiting risk. It's all about keeping risk to a minimum when we're trading. We don't want to get into these potential situations where we've got too much leverage, too much risk, so on and so forth. Lesson 9, we talk about the power of automated stop losses so that we can lock in profit. And stop losses can be done in ways other than simply a trailing stop loss. We give some ideas there about how you can use those things to give yourself even a more impressive edge. And using the right trailing stop to very quickly peel off risk and lock in profit is something that's going to take a good system and make it a great system. So we teach you a bit about that. And again, these are things you can apply back to any type of trading method that you use. Lesson 10, we get into some more of just the system intricacies and frequently asked questions. I mean, James has been teaching this for a long time. He's heard every question imaginable out there. So in lesson 10, and he just went ahead and answered those questions before you have to email me at support or other team members and get the questions, because we know you're going to ask them. So he just answers those in lesson 10. So that's pretty cool stuff. And again, I know for those of you that are here as part of the TradeThirsty team, we do have a very special price that we're going to put on this. I know that you're used to seeing things like this as a pretty high price point. And that's the case with the Complete Currency Trader. We are probably the most expensive forex education site in the world, and that's done by design. We purposely charge a higher price for our services because, well, we believe it. We use it. We believe it. We know it works. If you actually apply what we're talking to you about, the prices that we charge for a lot of our services are very high. We have $20,000 consulting, $3,500 Q&A. We have a home study package that's $14,000, $10,000 coaching. These are done by design. It's not meant. It's meant to make the barrier of entry a bit higher. We want to work with a very specific person, and to do that, we change the barrier of entry to attract the right people to us. This lesson that we're going to provide you today isn't $14,000 or even $10,000 or even $2,000. It's much less than that. And we actually provide a little bit of extra stuff as well. In addition to what I mentioned with the 10 hours of video lessons, we do 10 video lessons, 5 hours of video. We do a 57-page ebook that puts it all together for you. It gives you a written reference that you can go back to and look at, so you don't have to rewatch each of the videos. At the end of the course, you get it all written out for you so that you can make notes and quickly go back and look at your trading plan. We also provide an entry indicator and a trailing stop loss EA. These things work on MetaTrader 4, by the way. They don't work with other trading systems that are out there. And we also give you an MT4 version of the currency strength tool so that you're not reliant on the free one that's on our website. All of this we provide to you at a very special price for being here, being part of TradeThirsty. We do it for $99.99, basically $100. And the question always comes up, Brian, why $100? Why not more? You said you're the most expensive site out there. We are the most expensive site out there, but we want to make the barrier of entry to get to know us something that's affordable. So, we provide you with an incredible education for $100 so that you can learn the ins and outs of how the forex market works. You can learn about who we are to see that we actually deliver on what we say we're going to deliver on, and you can, get to know us, get to know how we trade, and see if it's the right fit for you. And if it is, down the road, we hope that you do more. Maybe you don't, and that's fine too. We have traders. Actually, I communicate quite a bit with one fellow in particular that's in Europe. He took the $99 course, and he's killing it. And he's like, Brian, why would I buy anything else? I'm doing great with this. And my response is, good for you. That's what we want. We want people to take the course, learn from it. Those that want to learn more and pursue more of a professional career in trading, we offer that to you. But this is a great way to get to know us for less than $100. And of course, if you get the system and you go through the training, you don't like it, just let us know. We'll refund your money. I mean, we want you to be happy. We want you to learn something. So that's the big piece out there. So let me take a couple of seconds. I think I've got some time for Q&A. I look like I've been talking for about 54 minutes, so I've probably got 4 or 5 minutes to take some questions for you before Jeanette gives me the hook and pulls me out of here. But let's just see. We did have some questions coming in. Does it work on TradeStation? No, it's for MT4 only. MetaTrader 4 is probably the most widely used tool for trading forex. So this tool, the tools that we have are designed for MT4. Of course, you can use the free online indicator and apply that back to any other system that you're using, because all you're really looking for is to understand more about the background of which currencies, individual currencies, what they're doing, so that you can then make a logical trading decision on which currency pairings have the best opportunity for movement, right? So there you go. So if the trading platform itself is the only thing hindering you, get the education. The education is worth far more, and you can apply that to whatever else you're using. That's don't get too caught up in the minor stuff here, right? Do you actually get CDs? No, I mentioned that earlier. I show you books and CDs because that, as a visual reference, if I just simply said it's an online thing and I showed you a link to a web page, that means nothing visually to your mind. So I put up pictures because that helps you visualize what you're actually getting. It's all this stuff, but in electronic format, right? So that's what it is. You get the immediate, when you purchase, you immediately get access to the information. The first lesson is released right away, and then we drip the others, so it's a new lesson every day over 10 days. We do that because we don't want you to skip ahead. We used to release everything at once, and what people would do is they'd skip lessons 1, 2, 3, 4, they go right to lesson 5, and then have all these questions that are all answered in lessons 1 through 4, but they skipped them. So we want you to, take your time. It's not a sprint. Learning how to trade takes time, and it takes an investment in yourself, and you've got to plan to spend time to learn. So spend a little bit of time each day and build yourself up, build your knowledge base, build your foundation. Don't try to cram it in all at once. You're not doing yourself any favors in doing that. You can't rush it. I don't care if you're trading with me or with Johnny or with anyone else that's on the call later today. You can't rush it. You've got to spend time building a solid foundation, practicing, getting it in, and then moving forward. I mean, you don't have to try to make a living tomorrow from trading. If it's 6 months from now, you're doing fine right now. If it's 6 months down the road, a year down the road, you're going to be better off taking your time to learn it and doing it right than trying to rush it. Anyway, that's my soapbox. Let me get off the soapbox and answer some more questions here. Let's see. Every time I hit this button, I go to the very beginning where it's just hello stuff. Yeah. So Richard, great question. Richard said, James, is providing this coaching because he's got some really good secrets, but how is it possible with the opening, especially in the U.S., to use a strategy like this when you've got these violent swings? Well, what you would do, Richard, is you'd wait for news to be over and then apply it a little bit later. I mean, there are days when you don't have violent swings. You don't have news, but there are often days when you do have news at 8:30. So wait for the news window to close, and we get into this as part of the training. But you wait for the news window and trade it after the news. Don't get in there when you've got limited liquidity around a high impact announcement, when the market can go any direction, or it often does go both directions very rapidly because that limited liquidity is absorbed the second that news comes out, and you've got all these impatient traders trying to get in, and it causes spreads to widen and movements to violently move up and down. But if you wait for that to all shake out and come in 5 minutes, 10 minutes after the news, then you can take advantage of what's actually happening with the trend. Yeah, the link should work. I tested it a few times before this, so link should work. Yep. Where do we get the free tools? I'll post the link in here in a second. I've got a link to give you. I've got to get off my presentation slides here. So what I'll do is I know that we've got our next speaker ready to go. So as soon as I stop talking, I will post a link in to the free tool, Dwayne, so that you got access to that. But yeah, I mean, again, no horrible sales pitch. If you like what you heard earlier and you like what we went through and you want to learn more, I encourage you to do that. We've got a very low barrier of entry to do it, and it's just a way to introduce you to us and see that we walk the walk and are actually doing what we say we're going to do, and to see that we over-deliver for you. And down the road, if you want to learn more, we'd love to have you on. But this is a great way to get started and learn more about us. All right, so I'm going to go ahead and wrap it up here. I know Jeanette's trying to keep everybody on track, so I'm right at an hour. So I'll get off here and let you guys get back to the next speaker.